The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this first day of May. We're looking at the Dow of 274 at 40,945. This is really good action. So for my subscribers, I wanted to kind of build a portfolio. I had a couple of stocks that were really important positions. That doesn't, not just stocks, but ETF and stocks. And almost everything worked out except one. And that one, I was really upset because it turns out the earnings were good and it spiked up, but now it's pulled back quite sharply. So my hesitancy yesterday seems to be borne out just in the sense that if it broke a certain level, that could be problems. And it was really more money management, but it was really upsetting because I wanted it as a core position, as a new position. We're in it from way lower, but we'll see what happens. Everything else is working out very nicely, and I'll go through that in a moment. Because look, the Dow is up 269. Most importantly, been waiting for about 3-4 weeks for the 9-period moving average to cross positive, and finally it did at the close yesterday, down 700 and something, and then closes up. Beautiful turnaround. And so far today, there's choppiness and there's buying and selling. Let me just show you this right. You're kind of stuck in a range. You're at 56.44. There was a beautiful left side, right side price time match to the arch formation from about 11 o'clock last night to about the midpoint at 4 o'clock, and then it ran up again and it came down, and it's now taken that level, the 50, let me just tell you exactly what it is. It's 54.34 on the E-mini. That's kind of important. And we're at 56.40. We did go through the 43 level just momentarily. I'm watching this closely because a lot of what happened yesterday was more, I can't say it was more short covering, because from my angle, I would have to say that there definitely was buying. There was buying in certain positions, and I'll go through some of them in a moment. But let me just say that I think right at this moment until 10:20, maybe another 12, 14 minutes, we kind of stuck, and then we'll see the new buyers come in or sellers, and we'll see exactly what happens. So let me run these numbers for you. So we've got the Dow up 247, the S&P. So the Dow is up 0.58%, the S&P is up 0.92%, even stronger, still in this leg B. Very interesting. Leg B right up to the 200-period moving average, as I said, 56.39. We're at 56.18 right now. We've been to 56.31. This is going to be tough. Right here, I'm starting to see some resistance. Look at the weekly chart right on the 14-period exponential moving average. It hasn't touched that for weeks. All right, now let's get on to the QQQ. 1, 2, 3. There we go. This is the Index 100 trading vehicle, and it's trading at a leg C on the 200-period moving average, right at that resistance. But the MACD has been expanding. The relative strength is good. The on-balance volume is good. The stochastic at 97%. I mean, that's what you dream about when you're looking at upward movements, and that's exactly what's going on here. So any pullback I would call temporary. We've got the IWM not doing as well as the others. 481.88 was the QQQs up very nicely, and the IWM is struggling to make that leg D. 196.70 is the high today, and 196.70, I think it was 3. 196. Oh, 86. 86 was the high yesterday, so 0.87 starts a leg D. And it's already at a leg D. So this is just a very nice bounce in the IWM, the Russell 2000. What I really need to look at here is the SMHs. The semiconductors, now they're up 2.30 at 213.58 in leg C, way above the 14-period moving. The 9 is way above the 14. The price is way above the 9, leg C. And all I can say is that I have no choice, because the stochastics at 93%, to consider this a buy mode. in the estimations. All the others are already in a buy mode. At 170.11 on the low of, I believe it was the 7th of April. This is a very nice move to the upside. Nice. It's not great, but it's nice. Now, this is going to be, to me, one of the keys. So we've got Microsoft spiking huge up. Yesterday, it's tootling along in the 380s. Today, the high is 436.99. Not missed by a penny, making a round number high. And it's still up 33 at 428. And I've been saying for a little while, yeah, we are long. We've taken nice profits. But at the same time, I was really looking to see how it held after that 9-period moving average crossed positive. And I was remiss in saying, let's just add to it. And if it doesn't work out, that's okay. We'll have a stop in place. But you don't really know how these things are going to come out. Was that a great month, 3 months that we just went by? Not at all. But yet Microsoft came out with absolutely fantastic everything. Now, how does it hold? And let's say a week from today, Thursday, now a Wednesday, we can go to next Wednesday. If next Wednesday Microsoft is not closed below 420, but is above, I'd say 418. 418 has held that, and hopefully is bouncing. That would be a really good sign for a lot of the tech sector, just in terms of having something work out quite well. Here's a question about Apple. Apple at this point is trading down 250 at 210.0. Should I waste time now, or should I just do it? I'll do it. So I've had a number of people over the last many months, about a year or so, talk about Apple. When they go to the Apple store, it looks fantastic, and everybody's just kind of cool, and they got all the stuff that you want to have when you're a cool person. But the service, I believe, is shocking. So I actually was there the other day with someone from overseas, and they were there. They were about to switch their old Apple cell phones. I'm just doing something here, putting it up. It is still a buy mode, even though it's not acting all that well. And they wanted to both, he and his wife wanted to change, just update to the latest Apple phone, and they would trade in the other. I have to tell you that the service, they were rotating all the time. Everybody was busy, but as they were free, they came up. It's like they had to restart every time. So there was no continuity from the original question, what they wanted to do, to the final, and it was all a mess. In the end, it was a mess. In fact, what they did is they of course, they went to the cloud, which is a good thing to be saved, but they went and transferred all his wife's data to his phone as if it was new. It was all wrong, of course, and plus many other things. And I've been hearing for quite a while about the service. Well, Apple is really a service company now. I mean, they've got, I don't know how many more millions of whatever it is they're going to sell, but they need to service them. And I'm looking at, someone said to me the other day, Apple 170 because of the service. Well, it's at 210 right now. 170 was the low that it was at just on April the 7th. I don't know, but it really is struggling, isn't it? I'll be right back. Basil Chapman, Dow's at 237, S&P's up 52. We're looking at an update so far.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Look, so we're back and we're looking at the E-mini. Look, going right back into that rectangle. It's just kind of stuck in that range, but it is seeing buying, and that is really it's good after that sell-off. I remember 1020. I said we haven't got there yet. We've got the new buyers and sellers, and we're going to see exactly what happens. All right, here we go. We're looking at. I wanted to go to this one right here. Okay, so we've got Apple, and all I can say is that Apple's kind of struggling here. It's got 219. That's a very strong 200-period exponential moving average resistance. Look at how it was support, and then all of a sudden became, for about 7 sessions consecutive, it became tremendous. It touched it 7 times, 1, 2, 3, 4, 5, 6, 7 times, and then it failed to gap down. So this is going to be a real struggle for Apple. And all I can say is that if Apple starts to trade under 204, it's a 210.74 right now, I think it's going to be I don't think it has to go down very much, but it says the upside is extremely limited. Okay, did that. Okay, I need to just go to gold. So gold is down a 93 right now, future 2. We've taken another little bit off our gold position, actually a little bit more than the other positions that we took off. I think that this is starting to show some deterioration in the technicals, but that 9 is still over the 14, and that still is a good thing. It means that it could still be a bit of a bounce, but I suspect that the green 9-period moving average of 32.99, and we're at 32.28, is going to be extremely strong resistance if we even get there. Now, this is going to be very important. Look at the GDX. The GDX is trading right now. I'd made the dreaded H. I didn't draw it in. I meant to draw it in yesterday. I spoke about it, but I didn't draw it in. There it is, dreaded H. Means that if you take out the left side low, you've got 2, maybe 3 bars in which to close above the left side high. And in this case, the GDX is trading at 47.26, down $1.76. And here's the level to monitor. 47.77 is the low, and we're trading right now at 47.27. So if we can close, if the GDX, the gold miners, can close above that, that's going to be good. I just want to go back to this because I can see buying coming in all the time. I just want to, I think, let me just do this if you don't mind. It's always a bit of a pullback. I'm just trying to see something here in the E-mini. Is that a resistance level that is going to be taken out securely? That's the whole thing. Let's see. Yeah, all I can say is that the E-mini right now, if it's able to close for 2 out of 3 bars, 5-minute bars, over 15 minutes, if it's able to close decisively above 56, 54, 75, let's call it 56, 57, I think that's going to bring in the new buyers at the 10.20 right now. So this is going to be very important. We'll see what happens. And market-wise, of course, no one's just following a single thing like the E-mini, but I'm just using that as an example. Silver right now, silver is down 37 cents at 32.45. There's that dreaded H. It just failed to make a leg D. But it hasn't broken down. The 200-period moving average is at 32.07. It's at 32.41 right now. It's struggling, and you can see it's just in a trading band right here in the middle of the range. In the weekly chart, I'm going to go to the platinum. So asked about platinum. Yeah, platinum has gone to peak A, peak B, peak C, right at the 200. This is how important those 200-period moving averages are. Look, it's just so much pressure. Now it's pulling back from that level. Next question was, high-grade copper. High-grade copper had a fabulous run from round about the 4.12, was it? Let me just get that exact. From the 4, yeah, that was from the 4.08 low on the 7th, ran all the way to 4.97. And now it's pulling back. It had pulled back sharply. It's holding okay, but now it's starting to struggle some. I do want to go to, I do want to look at wood, which is the iShares Global Timber and Forestry ETF. I haven't done this for quite a while. This can't be a leg A because that was the low. The bar that makes the low cannot also make a high. But there, so it's peak A, peak B, and it's just a peak B. It's holding quite nicely, but the weekly and monthly charts do not look good at all. This is the iShares for the Timber and Forestry ETF. And at the same time, I'd like to look at the bonds. Bonds right now are trading down, 18 30 seconds at 116 and 230 seconds. Let's just go to, if I can, I'd like to go to, not the bonds. I'm going to go to the TBT because that is the yields. The yields are bouncing a little bit, up 62 cents at 35.03. Okay, so within that context, I said that this is a peak B. I can't call it anything else. It has pulled back. Let's see where this goes. And it's kind of stuck in the range. So yields are not the issue at this particular point. Let's go to AEM. So the question came in, could I please look at Agnico Eagle? You know, this is going to be very interesting because I said there's no other way I can count this as a B. It could fail. It's very rare, certainly at highs, major highs, for anything that I'm following to fail at a P, anything but a D. From a D onwards, it does. Occasionally, it happens, not that often. So is this in a range? I'm suspecting that American Eagle down 4.19 at 113.39 has the dreaded H pattern. And if it closes, today's low is already 112.32. If it goes under 112, that's going to be a dreaded H failure, and you can get the 1-to-1 to the downside, which says 110 will be the next level of support. So it's really important for it to get from 113.42 to the 115s over the next day or two. All right, with that said, I want you to go to Visa. So Visa, I think they came out, I'm not sure if they came out with earnings, but they're in leg D. Not bad action. I want to go to, okay, so I haven't gone to Bitcoin yet. I forgot completely. Bitcoin is trading up 24.95. I have to just refresh. There it goes. Refresh. Yeah, leg D over the left side high that we were looking at in a shorter time span. That's good. So the next level of resistance will be in the right there. 21st of Feb, the high was 101,425. That'll be the next level if it's able to hold the gains here and not break and close under 94,300. Okay, so far, and we are long. So as a portfolio, I've loved the portfolio except for one thing, And that we're out of it. And now I can talk about it. So let me just show you. So we're along General Electric. We were waiting. Finally, we got into the General Electric. It's doing really well right now. It's at 204.54. And I call this a deep cyclical. We're in the 198 area. It's at 204. I got in late. I should have been in way earlier, but that's the way it is. And back at the ranch, the fact that General Electric Aviation, is that what they call it now? So anyway, GE's the symbol, aircraft engines, electrical equipment, appliances, etc. I like the fact that it's leading in this particular instance. I would love if it went to a new high above the high that was made. Did I put that in? 212.17 was the high back in February. And then what does it do? It goes to 214.21 on the 26th of March, 214.21. And then it goes whoop, down to 160. 214.31 down to that 160. That was a huge move down. So having come back in this V-shaped pattern is really quite encouraging. I'll be back in a moment. Basil Chapman, Tiger Technicians Hour.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Yeah, so GE Aerospace, GEV, there we go. GE Vernova is also doing very nicely. In fact, it is up, D is in leg E at 384. Very nice action. Good, let me just get out of that over there. Yeah, so very nice. Leg D goes to E right there. Okay, so the high, all-time high was up at 447.50. It's trading right now at 384. Very good. Okay, so this is very important to me because we're starting to see some kind of broadening out. I just want to check on what Boeing's doing, that whole area. There we go. Boeing is trading, yes, up its leg D, up $1 at 184.15. Much improved chart. Now, I promised that I would go through when April finishes, the day after it finishes, I'll go through the monthly charts to discuss them. So here we go, SPX.X, there we go, the S&P right now. Let's go to the Dow. INDU, monthly chart, look at this. Monthly chart, that is a spectacular candle. Going from, I should check 18% I've got on that, and the S&P did 21%, so I think I'll do that right this very moment. Let's go right here, and I'll click on that, and I'm going to go to right there, percentage change, and we'll put in the all-time high was 45,075, 45,075, and the low was 36661, I think 36661, and what did we get? Yeah, 18.6%. Okay, that was correct. So the Dow did better than the S&P. The S&P was down 17%. Let me just finish with the candle. So can I call this Chapman Roman candle? I prefer if the body is a half to less than a half from the top of the long wick. That's the Chapman Roman candle. So it has the characteristics, and what I say is, if it has the characteristics, you can use some of the technicals that I use. So if at any point in May, on a 2-day basis, I should say 1-day basis, on a 2-day basis out of 3, if there is a close under 39,000, there's a real good chance we're going to go probably at least close to the 36,661 low. If in fact we're able to have 1 week that closes higher than the high that was made in April, and that high was at 42,382.27. If we go to 0.28, that's a really good sign, and it says that if you're able to do that on a closing basis for the month, then you've turned the body of the candle, the bottom of the red body. In this case, it's the opening price of 41,879. You turn that into support for that month. Okay, so that's the Dow. Let's go to the S&P, and the reason why we've been long the Dow for a little while now, a small aggressive position long in the Dow, is because I've been looking at the way the stochastic has slowly been moving up. The MACD crossed positive and stayed positive, and the relative strength was moving very nicely. And then finally, we got a couple of days ago, we got the 9-period moving average. Sorry, in the S&P, you got I was talking about the Dow. Let me just go back to the Dow. The stochastic was starting to move up very nicely. The MACD did flip negative just briefly on that very sharp sudden. You remember that sudden pullback, and then we spiked up the next day. So this says to me that the technicals have really improved a lot. Let's go back to the S&P, SPX.X. There we are. So look at that monthly candle. The longest wick and the tiniest little body. Can you believe that you've opened up in the S&P at 53.97 and you close the month at 55.69? So open at whoops, wrong candle. This candle. You open at 55.97 and why does it keep moving? That's my hand that keeps moving. And you close at 53.69. So it's this tiny little body of a candle right there. So I'm looking at this and I think that was an incredible comeback. Now, I just wanted to show you this here. I'm just going to do something very quickly. That should move 58.58. So this is going to be very important. I need to just talk about it for a brief moment. Making it a little wide there, that's okay. So you see this 10-minute chart. Think of this as the daily. Let's get out of that one. Think of this as the weekly in leg B. And think of this as the monthly, right? And this monthly chart had such an ugly candle. Early this morning, went up and then pulled back and went to a lower low, big red candle. Then it was an inverted green, Chapman wave green, Roman candle. Price went above the halfway point, so it went to a higher high. And now we've got a big green candle, and now we're breaking to a new. Now, I can't call this A because I have to wait for a trough. So the irony of this whole thing is that if you call the 10-minute A right there, and the technicals confirm, and the 9-period moving average is cross positive, is it even possible under these circumstances that we could have a peak A? There's still a leg A. We haven't even made a peak. So a whole 10 minutes where it doesn't make a new high, and then another 10 minutes where it breaks to the upside. Is it even possible that we could get a D? Is this a 2-click session for anyone who was looking, and you could have got in when the 200-period moving average and the 5-minute chart was holding well, or when it crossed positive? Is this even possible on a day like this when you've had such a huge 700 points down yesterday in the Dow, and now you're actually up 300 points above the 100 points that was made yesterday? The S&P has just started a leg C, the E-mini, in the 5-minute chart, and it's still an A in the 10. And you're getting a little toppy here in the 1-minute chart. So I'm looking at this and I'm saying, I have to look at the different time sequence. So look, the daily is stuck at the 200-period moving average. Done very well. Remember, 56.39 was the 200-period moving average resistance. Here we are at 56.40 already. That's a nice sign, right? The weekly chart, leg A, wow, the technicals need so much to improve. And that's usually the case. This is the sandwich where the outer crusts do something, and then the weekly, the one in the middle, in this case, the weekly chart of the S&P, takes a long while before it can get back to a good recovery. All right? So with that said, we're about to go to a break. And as we go to the break, I needed to just tell you that the Dow is up 284, the S&P is up 69, and the QQQ is up 9. Nice action so far. Pretty darn good after that overnight explosive move to the upside. And Microsoft is up 36.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we've got the FXI. Oh wait, let me finish the candle. So this long wick candle, we were down 21%. Now what are we down? 7 or 8% or something? 61.47. I took it away. 61.47 to 56.45. I mean, really, that's a pretty good candle right there, right? Let's go to the QQQ. It's a little different because the Qs have already made a new recovery high. In other words, they're above the QQQ. Investor QQ Trust Use. That's the Russell, the 100 NDX 100. Is actually right on the green 9-period exponential moving average. Remember what I was saying, that the 9-period moving average is so strong that it bewilders me that there is just so much negative news, negative everywhere you look, even the small. You can just look at any newspaper, just everything about the economy, etc. And yet, I would say that that's pretty damn good action right now, right? It could be different in 2 weeks, 3 weeks, 4 weeks' time, but right now it's looking pretty good. So what did I just do? Cancel? Cancel. Something happened there while I was talking. Okay, yes, good. Okay, that's fine. Now, even more important is that the 200-period moving average, just at the moment, we're above the 479, it's at 484. That's really good. 9-period moving average. IWM is the laggard. Is this going to actually turn into something much stronger? We don't know yet, but this is a leg D, and it's acting quite well. But quite well is not good enough because that weekly chart is looking. So let me do this. The XLF, remember I like to do the S&P with the 500 as opposed to much broader small caps, 2,000. So what we have now is that we have the XLF at a leg D just above the inside track repellent zone. It needs way more to say that that's a key support level. I'll show you one of those in a moment. It needs to get to the 40. It's at 48.72, down 3 cents. Right now, it needs to get to the not right now. I mean, in this coming week, in next five trading sessions, it really needs to get to the 49.50, 50.35 area. Needs to get into the 50 to say, hey, I'm back, but it's not there. But then I want to do the KRE, which is the regional banks. And look at the regional bank, stuck in this range. And then all of a sudden, you've got candles that are starting to peak over that's PIQUE. No, PEAQ, PEAK, above the inside track repellent zone. Now it's turning into some kind of a propellant zone. So you want the regional S&P regional banking ETF to actually at 54.85, up 72 cents right now. I want to see it push into the 56.80. And then above the 200 period moving average resistance of 57.03. I'm going to give it all of right to the Friday a week. Let's go to Friday a week, which it'll be the 10th. All right, through the 10th. Okay. Now, what do I need to do? I just wanted to check on this because, we got that. I got that as, that's a peak C. All right. So now we should get it. If you take your time, I'll talk about, this is a technique in the Chapman methodology I need to talk about. When there is a peak, A, and then a B, and then a C, and the C takes its time, but it does get to that D, very often what it does is it creates a whole new trading band that says, within the context of, let me just do that, within the context of this pattern right here, when you get to the C in the cup formation, the longer you take to get there, the greater the chances are that it could be starting a new move to the upside. So we haven't got there yet. We'll talk about that if we can. We'll have 10 minutes. There's a 1 minute chart, so we might have a chance to talk about it. We'll see what happens. Meantime, back at the ranch, let's just go back to those monthly charts. So the S&P, the banking regional, look, that's the Chapman Wave Roman candle right there. So if at any point if the KRE starts to trade on a closing basis, I'm going to make it a daily chart. Any day it closes under 51.50. It's at 54.94 right now. That'll be a big problem. But right now, it's just worming its way to the upside. It's not showing leadership, but it is showing followship. Followship to the XLF. Basil, U. Okay, yes. U is a uranium stock. 1, 2, 3, 4. There we are. This is Energy Fuels, Inc. It keeps spiking up, but it's having difficulty holding. And if you look at the URNM, which is the uranium, Sprott Uranium Miners ETF, that's peak A. Yeah, peak A, peak B. No, this is A, B, C, D, E, F. Oh, it's done very nicely. So we are starting to move higher in the uranium. Let's see the UEC. We haven't gone back into it for a while. That's kind of slow. Okay, so you wanted to U. I'm just saying that as long as the uranium, CCJ, I need to do that because that's the leader of the group, CCJ. That's Cameco, Core Uranium Fuels, peak AB, CD, right at the 200 period moving average. Okay, so I'm going to suggest this because it's a small cap, and a very low price stock. The percentages, it's very difficult to give you percentages, but what I am going to say is, and I'm just going to move this up here while I'm talking, I am going to say that the 9 is over the 14. It is holding well. The MACD is good. The relative strength has pulled back a little bit. The stochastics pulled back, and the on-balance volume is moving up. I like this. I've got to give it time. If you're prepared to give it time, the moment you see it trading at 488, just round about there, 488. No, I need to say 491. 491, that would say to me now it's got the impetus to work its way up to the 517 200 period moving average. Within that context, you might see some bouncing around. I would not like to see it under 418. If it goes under 418, I think it's done for a little while. But as it's going now, it is trying to make higher highs and mostly higher lows. So I think it's acting quite well. But as I say, I would like to get it into the 480s, and then I'd be much more comfortable. Hope that helps you. Next question is, I have a basic question. I'll be using ES or ESM25 for a discussion here. I'm not sure about their scope. We're using the ESM. We're using the ESM. There must, at a certain point of the month, there starts to be a difference. But right now, I don't think, maybe there is. Let me just see. The ES is trading. This is the difference at 56.68. No, they're in unison. That's okay. No, it doesn't matter. They're doing almost the same thing. So, I hope that helps you. So I need to just erase that because I don't want to mess around while I'm talking. I got that. Yeah, considering that you just got a 1 minute D, any concern that 10 minutes is actually a G? Oh, that's a good question. I think I've got time to do it. Let me just show you something here. I'm going to go to ESM 25. So there's a peak C1, C2 in the 1 minute chart, a peak C, a leg C in the 5 minute chart, and an A. That's a good question, and I'll show you what I have to look at to answer your question. And it is a very good question. And I'll explain why this is an A. I have no choice but to call it an A.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Yeah, so this becomes a peak C1, C2 in the 1 minute chart. And because I'm looking at the 5 minute chart as a peak C right now, I'm expecting a little bit of a pullback maybe. So at this C1, C2, I usually say, okay, I'm going to, if whatever positions, maybe I'll take a little bit off, just a cautionary moment. This is an A. And the reason is it took out all the left side A's where it started at peak A, B, C, D. That was the starting point at the 56.35 level. And we took it out right there at 10 o'clock. It plunged down and then it ran up. So I have no choice but to put an up arrow. It's the funny thing about that, even if it fails. So this is a good sign right here at A. And I do expect that when it makes a peak it's going to only pull back for a little while. So let me just make this clear. So the action that we've seen from this 10:20 time frame, you remember 10:20 Eastern time, this is really important in the sense that it is giving you some structure. It says that you've had your overnight huge buying, then you had that sudden sell-off, and now you've got new buyers coming in. This could last into Steve Rhodes' show coming up very soon. And then we'll see. And maybe in Larry's show, you start to see wider pullbacks, deeper pullbacks. But so far, this is an A, and it says you should still go to a leg B, and then a peak B, then a leg C, and a peak C, and then a D. I can't believe it, but that's what the 10-minute chart is saying right now. It could fail, and it'll fail if it suddenly closes under 56.51. It'll say, oh, be careful. But, of course, it really has to take out the low today of 56.2725 that was made at 10 to really fail. So with that said, as I say, we've got positions. We added long positions. We did add to our AIQ, which we've got much lower down. That's the AI area. I like it very much. I think it's doing very, look at that nice chart. Look at that monthly chart. This is the Global X Artificial Intelligence. We got in yesterday at 36. It's at 37.52. Gives us a little cushion. That's all I'm saying. But I'm liking what I see, at least for this coming week or so. Then we'll see what happens. Have a wonderful rest of the day, and check out my Open Call Daily Newsletter, and I will see you tomorrow.